Good morning, traders. Welcome to today's market review. This is Fred Razak at CMTrading. Today is June 15th, 2017, and today is Thursday morning. So looking at the volatile economic news coming up for today, all right? We had the big FOMC yesterday. We'll look at that in just a moment, but before that, we had this morning Aussie USD unemployment rate. We'll look at that as well. Swiss franc at 9:30 South African time is Libor rate. It's an official bank rate that's coming out. 10:30 South African time, we have this retail sales coming out. Not a big number, but something that you want to keep in mind that it is coming out. And then at 1 o'clock South African time, we have official bank rate coming out of GBP. Now, Carney, who's the governor of the Bank of England, will be speaking this evening at 10 p.m. Okay, so just keep in mind if you do have some trading this evening that you'll be doing, just that he'll be speaking. So let's look at what's been happening. So we're looking here at the EURUSD. I would say the Forex symbols were much more affected yesterday than the indices by the Fed rate decision. Fed Chairman Yellen will be raising the rate, which is unprecedented for the past, I would say, 14 years. Okay, we've been really in a very, I would say, a very confined area in terms of the interest rates in the United States. I mean, preceding to that in the 1980s, we had interest rates about 14, 15%, just imagine. And today it's gone down to 0%. Now, everybody followed the model that Japan put together, but Japan was forced to do so. Japan lowered their interest rates to 0 about 15 years ago, and thereby, you know, all the other countries had to follow suit, right? Because it got cheaper for people to borrow money, you know, going to Japan, and they went to Japanese banks. So the rest of the world had to follow suit. So the fact that we're actually increasing interest rates is showing that the market is really very, very bullish. At least the U.S. Equities market, I'm talking about the stock market, the companies are doing well. Okay, so it's a way to curtail too much growth by increasing interest rates. It's putting things as a damper. So in effect, it's a double-edged. It's good news and bad news. The good news is the economy is doing well, and the bad news is that, you know, it's going to cost you more money to do business, okay, to borrow money and so on and so forth. So we're looking at the EURUSD here, and the EURUSD really rallied yesterday with the news. We hit 112.82-ish level, as you can see here, and this is exactly what I was talking about yesterday. Just know your levels. If you were able to jump into this short, okay, and just fade this move, look at that. You would have been able to make about 60, 70 pips with no problem, okay? And that's exactly what happened. We rallied and then we corrected ourselves right afterwards, okay? This is a famous trading strategy right after a major number comes out. It's called fading the news. We have this extreme move upwards, and then you have the correctional move downwards, okay? So in anticipation, you could jump into it in areas where you see that there is resistance. So right here at 112.82, there was resistance, and we knew that from before. So had we been able to put out some short sell positions out here, you've been able to make this this fade. The drawback with doing this strategy, obviously, is that if it does continue going up higher, you do need to make sure that you're protecting yourself on the upside. So we're pretty much unched from the beginning of the week, right? We started the week at about a 112.06-ish level, and we're right there. Okay, so in all fairness, in all essence, we're unchanged on the matter. So, you know, right now we're in the middle of the range. Not much to really do at this stage, unless we, you know, continue selling off here, or you see that we solidify and we come and try and challenge this resistance again. But I think we're going to be trading within this range of 12.82 and 111.62 as well. So just keep an eye on that. Like GBPUSD, big news coming out. It's a bank rate decision today. We had this correctional move from the elections last week, okay, a little bit of a rally, okay, that's a correctional, but it didn't completely correct itself. So maybe today we'll get that correction, okay, depending on how Carney discusses the economic environment in Great Britain. It has been struggling just of late, but you know, we may see something of an uptick here if he gets a little bit more aggressive and tries to pick it up. Now, we discussed Aussie USD had unemployment numbers coming out this morning, very favorable numbers. We finally made back this rate decision. We had a rate decision back here, and we finally made this back. So, you know, what's nice about this is that as well, it's trading in a range. Now, it took a much longer time to trade within this range, but it has been trading in a range. So just keep an eye on the Aussie USD. If we do continue going up this resistance level of 66.02, we may hit it to 77. So you got a couple of options here, either to short it because we're at resistance here, we're not really breaking out higher, or to, you know, play the breakout and buy it once it breaks out above it, and the anticipation will go to 77. So just keep an eye on this as this unfolds as well, and sees if it does solidify. Now, gold did nothing yesterday, 1261. We really, you know, we had a little bit of a spike, but that was a correctional move right afterwards, 1277, and then we came back to 1261. So in truth, we're back. What I mean that we did nothing, we're back to the same position we were before the numbers, okay, which was 1261. I do anticipate a correctional move here since we've gone up from 1220 to 1300. We're trading now at 1260, so we're pretty much almost midpoint, okay, at midpoint right here. So there must be this may be a additional move where we do hit support here, okay, because we've had previous support 1, 2, and previous resistance. So 1260 might be a place where we will bounce off of this. So keep an eye on this as this unfolds as well. Now let's look at the Dow Jones. Dow Jones struck everything off yesterday, and guess what? We're at all-time highs, 21,297, just shy of 21,350, okay, which is our all-time highs. Look at that graph. Now we're not coming in, okay. I would have anticipated Fed rate decision goes up. You know, back in the day, about 20 years ago, when Alan Greenspan was the Fed chairman, and you had interest rate goes up, you had a big correctional move on the downside. Markets were very volatile, and there was extreme response to the situation. Here you're not seeing that. You're seeing the exact opposite of that. Just the market taking it, shrugging it off, and continue on its merry way up the tick. Okay, so just see how this unfolds as well throughout the week, because, you know, like I said, we're strong. Okay, so if we rally every day 50 points and you're trading a lot, that's an easy $400. Okay, so just keep an eye on this. This is Fred Razak at CM Trading. I want to wish you guys a great trading day. Thank you.